All right, so we've evidently had a lot of things going on in the livestock industries lately. Um, maybe I can do a good job. Calvin's already pointed out my laziness and not making up my hotel bedrooms. Maybe I'll do a little bit better job of talking about beef cattle markets, and we'll talk briefly about the poultry situation. I'll do my best here. Uh, the first thing to note in the livestock industry, especially in the beef industry, is we've had extremely strong demand for beef and for finished cattle at the time of year when demand for beef is at its weakest. February and March are the weakest months for beef demand. And oddly enough, we've had some really strong price movements. Now, what has helped that? And I think if you were at the meeting that we had back in November, I made this statement, and I'm glad I was correct for once, and kind of hit this one on the mark for a really good part. But if we think about 2015, the fall of 2015, when cattle prices really started to decline, we were looking at a situation where cattle feeders were holding cattle back because they thought prices might increase and they were losing dollars. So they kept on holding cattle back, which meant heavier animals and putting more beef on the market. So what that just exacerbated the problem and forced prices lower. Well, last fall, when prices started to decline, as y'all can see here, going from $1.30 in May all the way down to below $1 in October, what was happening there is the packer was making a lot of money. So the packer, whether it be JBS, Cargill, Tyson, National, whoever it was, they were wanting to pull animals out of the feedlot into the packing facility and move them out because they were making $300 and $400 a head. And at the same time, the feedlot was a willing seller because everything that they were placing it into the feedlot at that time looked like it was going to be more profitable than the animals that were on feed. So they were getting rid of the ones that were losing money and buying animals that they thought would make more money. So that's what happened. And what that did is that pulled a lot of animals through, which made us very current in our marketings, and that helped support prices all through December and then through the first couple months of this year. And so we've been trading cattle up in the 124, 125 area as a cash price. Now the futures price is trading. The April contract, which is the nearby contract, is only trading around 115. But I have a feeling that the futures price is going to move more towards the cash price, and the cash price is going to decline. I did see where we had some forward contract sales yesterday for late March delivery around 121. So feedlots are, they're looking at the futures price and saying, well, it's trading at 115. I'd much rather sell these cattle at the end of March at 121 and capitalize on that premium. So we'll wait and see. Finished cattle prices usually peak sometime towards the end of March and early April. But I do think it's going to be hard for us to push much higher than the 124, 125 mark that we're sitting at right now. Do I think we should be trading at 121 at the end of the month? We'll probably have a dollar or so on that by that time. Something for folks that are this is something that for producers that are on this meeting, or for extension folks that are working with some producers and looking at marketings in the near term. I think something that's very important to note, we've had a $35 increase from the October fall low price on 5 to 6 weight steers all the way up into the end of February. There was a $35 per hundredweight price turnaround. What that equated to is when I got to looking, I thought this is just an amazing increase in prices. And so I went back and looked at the last 20 years of data, and only 6 times in 20 years did we have prices increase more than 20% from October to February. Now, there's only been a couple years where prices actually decreased, but I'm talking about 20% or greater. And so then I start thinking about, well, what about folks that are going to be marketing between now and April or something like that? Well, of those 6 years in which prices increased 20% or more, 5 out of those 6 years, prices continued to increase from February to April. So if we got some people, if we've got producers that are looking at weaning some fall-born calves, or some are born calves last year and they're needing to move those animals, it wouldn't hurt to wait a few more weeks, because we're going to expect those lightweight calf prices to continue to escalate a little more. And actually, the one year that they didn't, they were flat. So adding weight is not a bad thing. If we put another 50 pounds on them, another 60 pounds on them, on those animals, it's not a bad idea. There will still be plenty of people looking for those animals to go on grass come the first week of April. So that's just an immediate marketing situation with no hedge options, no futures or options or livestock risk protection insurance being utilized in that. So just looking at the cash markets. 7 to 8 weight steer prices, this is weekly auction market data, but we've been trading really steady on these markets for several weeks. And especially when we look at load lot data, a lot of these animals are trading in the 120 to 130 range, depending on what weight class you have. I'm just thinking about 7 to 9 weights. And it's amazing, even when we look at we have an amazingly strong basis in both live cattle and feeder cattle right now. Generally, we would be selling 7 to 8 weight steers about $12 below the nearby futures. So we're looking at a -12 basis. Well, right now we're actually looking at an even to a +2 basis on 7 to 8 weight cattle, and 8 to 9 weight cattle are pretty much an even basis, which is just amazing. So we're looking at plus $10 or $12 over normally what we'd be getting. I think it's important to go ahead and note, looking at heifer slaughter. The thing is we saw the past 2 years we've seen tremendous growth in the beef cow herd, and the two ways of doing that are retaining more heifers and keeping cows a little longer. And you can see there from 2000 to 2006 or 2015 to 2016, we actually increased heifer slaughter by 5%. Almost all of that increase in heifer slaughter was from the July to December time period. The first 6 months of the year, we didn't increase heifer slaughter at all. It's pretty even with 2000. So 2016 heifer slaughter from January through June was very much in line with that same time period in 2015. But the back half of 2016, we really saw heifer slaughter ramp up. We had some weeks where heifer slaughter was 13 to 15% above year-ago numbers. So far this year, we're a little over 7% above 2016 slaughter rates. Now, this doesn't mean we're slowing down. This doesn't mean that we're reducing the cattle herd. It just means we're slowing that expansion phase. Heifer slaughter would have to be a little higher than what it is right now for us to say we're going backwards and reducing the cattle herd. Similarly, steer slaughter has been really strong. What else are you going to do with the steer other than put it in the feedlot? Well, we're just looking at an increase in steer slaughter that's primarily due to the increased growth in the cattle herd. So if we suspect 50% of the animals to be male and 50% of the animals to be female, that means we have more growth potential on a percentage basis from heifer than we do from steer in this current market situation that we're looking at. Beef cow slaughter is up as well. So what we know is that prices in 2014 and 2015 were calling for people to have more cattle, we need more cattle. But prices now are saying slow down a little bit. We think we're going to get to the point where we got enough cattle. And the thing is people this spring are actually going to do pretty well. People might think that spring calf prices and yearling cattle prices aren't that good relative to where we were in 14 and 15. But if we look back to 13, 12, 2011, we're sitting really pretty right now. And if you're not making money in today's market, I don't know where you're going wrong, because it's probably going to be more of a cost management situation where we need to pay attention a little more to our cost if we're not making money in today's market. There's plenty of money to be made in the cattle market based off where prices sit as of today. This is where things are going to get hairy, and this is actually where the avian influenza outbreak that we've had is really going to. It's going to be tough to tell what the full overall impact is going to be. It's going to depend on our export markets. because overall, even if let's just say we didn't have a high path outbreak, let's just say everything was still going on as normal. We've got increased beef production. It's up 4.3% compared to a year ago. The way that we're increasing beef production is primarily through slaughter, increasing slaughter levels, but we also increase beef production by weight of animal. But thankfully, we've been pulling animals through the feedlot so fast that average dress weights are actually declining. And I think we were 7 pounds below this week a year ago. So if we compare this same week's or last week's average carcass weight to the same week a year ago, we were about 7 pounds below a year ago. And when you think about that, that's a huge number. 7 pounds is a huge number because we killed 581,000 beef animals last week. So, 581,000, let's just call it 600,000. And we're talking about 7 pounds on each one of those. We're in millions of pounds there. That's 4.2 million pounds of beef a week that we've reduced just by reducing the average carcass weight. Now we've increased slaughter, which has caused the total beef production to be higher. But just think if we had, instead of 475 million pounds, we were close to 480 million pounds, which somebody has to take on that beef. Pork production's up 1.4%. We were killing record numbers of hogs last fall, and I'm talking about historically records. Right now we're harvesting about 2.3 million hogs, a little over 2.3 million hogs a week, whereas last fall we were over 2.4 million hogs a week. We actually, I think it was either 3 or 4 weeks in a row we set record levels on the number of hogs being harvested. We have reduced weights a little bit on hogs as well, but we're going to continue to see hogs. The pork producers have been making a lot of money. Things are starting to look a little sketchy on a few sides of it, but they've been making a lot of money, and they're going to keep on producing more hogs. We were bumping up against harvest capacity, so the number of slaughter facilities for the number of animals was getting a little tight, and we were running a lot of full 6-day shifts. A lot of times these facilities will only run 5.5 days, so Monday through Friday and then a half a day on Saturday. And a lot of these places were running 6 full days back in the fall. But we do have 3 more facilities coming online this year, and so that's going to increase that harvest capacity on pork. Broiler production is continuing up, and this is where the avian influenza situation comes into real problematic. 2014/2015, we had the first outbreak of high path here in the United States, and several countries stopped importing meat and eggs from the United States. Primarily, the egg industry and the turkey industry is who was impacted by high path in 2014/15. This year, we're seeing it in the breeding flock here in our own state, and that has bigger ramifications than the table egg industry and the turkey industry. So we've already got reports where some of our biggest trade partners, China, Japan, Korea, are not. Almost all of them have bans on broiler meat coming from Tennessee. All right, so what does that mean? Well, that doesn't mean a whole lot if it's just that meat coming from Tennessee. It'll just shift from somewhere else, and our broiler meat will stay domestically. All right, so that's not a big situation. But if this thing continues to expand and these countries shut down importing poultry from the United States completely, well, then all of a sudden the domestic market has to absorb this broiler production and this chicken production, and that's going to put a lot of pressure on those prices. And when those prices go really low, that's going to continue to put pressure on the pork and the beef industries. So we'll see how all that's going to turn out. It's going to be a tough one to determine between just here in the short term. It's going to have a little longer term effect. That's just in words what I've already said. The box beef cutout is I put this up here to show how strong that beef demand has been. It's primarily from the export market. Well, the domestic market as well. I shouldn't say if there's nothing. The domestic market has been really strong. I think a lot of that has to do with the fact that the retail price of middle meats has declined, and consumers have come into the situation of what I would call ground beef fatigue. And they're ready to buy some of these higher valued products where the prices declined. And so the past couple of weeks, we've really seen the loin and rib primals, which are those middle meats where those nice steak cuts come from. They have really supported the beef cutout the past couple of weeks. It's not normal for them to escalate so quickly this time of year. It's usually delayed another month or so. And we just happen to be in a good situation, and we're exporting a lot of beef to Korea and to Japan, and that's primarily because Australia had been in drought for the past couple of years, and they've actually started to get some rain, and so now they're trying to rebuild a herd, which that means they're not slaughtering as much. They're kind of in the same situation we were in back in 2012, 2013. They're in a transition phase of trying to regrow that herd, so they're not harvesting as many animals, and thus the price of their beef is really high. I wanted to put this up there. This shows the November 8th drought monitor, and I think everybody in our state, except for West Tennessee, West Tennessee stayed in fairly good condition, but we know we struggled through some drought. I'm going to, and at one point it looked like things were going to improve, but now we fast forward to the last week's drought monitor, and we're back in a situation where it's not just the southeast, but a lot of grass country, cattle country is covered up in drought. Because when you think about Oklahoma and Missouri, and there's parts of Texas, but Missouri and Oklahoma are two of the largest beef cattle herds that we have in the country, and drought is starting to take over those places. Winter wheat in Oklahoma and Kansas is suffering terribly, so a lot of those guys are having to move stocker cattle earlier than normal. A lot of them would be trying to graze out wheat because, as Aaron's already mentioned, wheat prices are pretty low, and so there's not a whole lot of people that are in any hurry to harvest grain on dual-purpose wheat this year. A lot of those guys are going to have tried to run two sets of stockers, one that came through the fall and got marketed in January, and another group where they would try to be grazing them from February, March, and April, maybe into May. And so some of those guys aren't going to be able to do that and going to have to move cattle a little earlier than normal unless they start getting some rain that's going to support that cool season annual. And the thing is, similarly in Tennessee, we're looking at situations where people that would use cool season annuals or people that are looking to graze perennial forages, cool season forages such as fescue or orchard grass, are not going to have as much grass there. Part of that's due to the drought that we had last year back in the fall, and part of that's going to be due to kill out, and then part of it's just going to be from the fact that we're not going to have enough moisture to grow that grass in the spring as well as we normally do. So, that's going to be a big question for cow-calf producers and stocker producers. Are we going to have enough pasture this spring and summer? What kind of hay production are we going to have? For 2017 profitability, maybe calf prices and cattle prices aren't our biggest concern right now. Maybe being able to feed those animals through next winter may be a bigger concern because we don't have a clue what hay production is going to be like. We've had some years here in the past couple of years where hay production wasn't quite what we expected. It was a little lower than normal, or it was very poor quality based off of timing of rain. Right now, Aaron's already talked about the grain markets. It's really cheap to use commercial feed right now. A lot of these commercial blended feeds are $200 to $210 a ton, which when you're looking at $200 a ton, that's only 10 cents a pound on that product. When you're thinking about having to pay as much as $90 to $100 a ton on hay, all of a sudden commercial feeds, blended feeds look really, really good for the nutrient value that you're getting out of them. This goes to show where it is very cheap to feed cattle in the feedlot based off the last information, which is closeouts in December. 69 cents for a pound of gain in the feedlot in Kansas. Very, very cheap. And I suspect it will continue to be cheap, especially if we have, even if corn yields don't meet expectations this year, Aaron, we're probably still going to have enough grain and soybean meal on the market, enough byproducts that it's going to keep feed prices low. If we stay under that $85 a hundredweight price as far as cost of gain, it's going to be a pretty good situation. I'm showing you here that Aaron showed a similar graph on how narrow of a trading range we've had. Feeder cattle, this is actually May feeder cattle, closed yesterday at 121.90, but we've been between 120 and 125 pretty much for the past month and a half or so, and I don't think it's going to be hard to break out of that range in the near term. We might see some upside potential come the end of March, beginning of April. The first couple of weeks of March, first 3 weeks, from technical indicators, from if you're using more research charts, there's usually some weakness in feeder cattle this time of year. So it's to be expected in reality. So when we're thinking about that type of information right now, what I'm showing spans October, middle of October of last year to yesterday, and so we're in a far better situation than where we were last October when the price lows were met. This is to show August. The reason why I put two of them up here to show 2 different months, still we're trading in a very narrow range again, but the point of it is feeder cattle have no carry in them. The prices are trading within a $2 to $3 range for several months. I think even out to the November contract, we're looking at about the same, between a 120 and 125 price, and that's just not very common to see such a narrow range throughout the entire year on feeder cattle, because those prices generally peak around mid-July to early September and then fall off. And this is August, and October and November are just trading a couple of dollars back of this. And that's not a typical seasonal change. So people that are playing the market, could definitely play some spreads here and would probably make $1 or $2 on that. And actually that was something a couple of weeks ago Aaron and I were discussing in the corn market, where there was actually there's no carry in the market, and harvest prices might have been a little higher than carrying it over into the new year next year, if I remember correctly. So I want to look at two situations just real quickly. I think I only have a couple 3 more minutes left before my time's up. But looking for folks, whether you're a stocker producer or you're a cow-calf producer that has animals that are going to be weaned pretty soon, just looking at a purchase weight of 525-pound steers in March and carrying those animals through July. Right now, those animals are probably worth an average 525 steers is going to be about $1.44, $1.45 type price range. If you carry that animal at 2.3 pounds a day average daily gain, and with an expected price, I don't know why that has August, that's supposed to say July. We're looking at about $1.25 a hundredweight, and so that's an 89-cent value of gain. So a lot of people will be able to carry these animals with spring grass for somewhere between that 45 and 55 cents per pound of gain for cost of gain. So a lot of people will have some wiggle room there, maybe 40 cents of value for every pound they put on. Now 2.3 pounds is probably achievable in the March, April, May time period. June and July gets a little tougher to get those gains, but it's definitely achievable in some situations, especially if we start feeding some commercial feed. Now here's where August is actually in the correct place. What if we got some people that are weaning more towards May? I think about a lot of the region of the southern Middle Tennessee area of people that participate in the Alliance sale. You know, even up in Montgomery County area, there's a lot of people that participate in the sale in Guthrie, Kentucky. That's also around this same time period, and so a lot of people will be weaning calves in late April, early May, or mid May for being able to sell calves in the August Alliance sale. But August is also one of the biggest months for load lot sales from stocker producers, and if we go through that same kind of analysis, I'm expecting those prices of 5-weight cattle to decline between March and May. So I've knocked off $6 there on that cost. I'm reducing average daily gain because grass usually is not as good during those summer months, depending on what you're feeding those animals, because fescue will start playing out. But we're still looking at expected value gain of 87 cents. So, you know, there's a lot of people will look at that 70 to 75 cent range as what they have to have on a grass situation in order to even consider carrying these animals. So I think we're going to beat that right now, and I think we'll be in a good situation. So backgrounding cattle, preconditioning backgrounding cattle for 90 to 120 days is not a bad decision at this point. So with that,